Hello and welcome back to Ego First. In this video, I will show you how to identify fair value gaps in your chart. So in the world of finance or any financial trading asset, forex trading, okay, identifying a fair value gap is a crucial skill for traders and also for investors alike. This concept is often discussed in the context of technical analysis and market structure, and it holds very important value in forex trading. So a fair value gap could be referred as a price gap in the chart, okay, that exists between two levels. So let me explain this in using this chart on this screen, okay. So let's go. You can see when this price is delivering. You can see when this price is delivering, okay. You can see it. You can see the first candle, the second candle, and the third candle. You see when the first candle closed here, the second candle started and also closed here, okay. Now this third candle, it started. You also came to this zone to close and make contact with the wick of this first candle. You can see it that the wick of the first candle and the wick of this third candle is touching each other, okay, and price eventually close here. So in this scenario, this is a heady price movement delivery, okay. In a three candlestick price action, this is a very good heady price delivery. Now look at the green side of these candles. You see the first candle form, the second candle touch the wick of the first candle and close here. Now the third candle, which is this one, touch the wick of the second candle and close here, but failed to touch the wick of the first candle, thereby leaving a gap, okay. So there's a gap between the first candle and the third candle, okay. Let me show you this gap. Let me draw it so that you can see it. This gap that is existing between the first candle and the third candle is known as a fair value gap. You can see this gap here. You can see here. There is a gap between the first and the third. So this gap now is known as your fair value gap. So inside this zone is your fair value gap area in your chart. So it's expected that in the future that price will return back to this zone to fill this gap before a continuational move. So we'll go to the chart to show you how these things look in a real life chart. But before we go there, if this is your first time coming across my channel, kindly subscribe to my channel. Hit that like button, okay, so that you know whenever I upload a new video. So let's go. So I am using a daily chart. This is a daily chart, okay, and this is 0 JPY. So let's start. I want us to start from here so that you can see. Let us start from here. This place I'll be drawing this trend line, this price delivery. You can see this price delivery. Let us use it now. So from this zone to this zone, that's what we're looking at. So when price is moving up from here, when price started moving up from here, it move up like this, come back, okay, it moves up again, come back a bit, break above, okay. When this price break above, you notice that in this price movement now, this green candle is the first candle, this green candle is the second candle, then the third candle that form, which is this red candle, failed to have a contact with this green candle here, thereby creating a fair value gap and price moves up, okay. So in the nearest future, price later do what? Came back to fill it here. You can see it here. So let me highlight it so that you see the fair value gap that was created before price continue in the bullish direction. You can see between here, are you seeing it? Between this zone, there's a fair value gap here. Price later came back to fill it. Let me change this color. I hope you are seeing it, okay. There's a fair value gap there. Price later did what? Came back in future and fill it and start moving up. There's also another fair value gap here. Let me show you. So you need to train your eye. You can see it here. You need to train your eye. You can see this zone now that I'm drawing. I hope you are seeing it. I hope you are seeing it. Let me make this candle to be big so that you see it clearly. Let me make it big. Okay. You can see where I'm highlighting all the fair value gap that existed as price is delivering, moving up. Okay. I notice that this is whenever a structure is broken. Whenever a structure is broken, always look at from the price movement where that price starts. Start looking at if you will see a fair value gap here. So we have seen two, and price later came back to feed those two. You can see it this one. Let me price later came back to feed those gas in the future. Okay, that's one here also. Though price didn't feel it. There's another one here. You can see it. There's another one here now. Okay, this one has not been filled. Okay, so price continue moving up. There's another one here. Though price didn't come back immediately to fill it. See another one here. See another one here. Are you seeing it? But you look at it, you see that when price came to this zone in the future here, that it reacted immediately. That to show the importance of this fair value gap. I hope you are seeing it. When price came back in future, price reacted to that zone. From this point, when price hit this point at 164,800, price rallied back to 167,400, almost 250 pips movement. Okay, because of this fair value gap. So this one moves up. Is there another one here? There's no new one here now. So this side now, this left hand side has finished. We found about five value gaps here, and all of them, only one was not filled. Others were filled. Okay. So now let's take a look at the right hand side now and see the fair value gap that we can identify. Okay. So in this scenario, there's a fair value gap at this place. You can see it. This place that yellow zone is there's a fair value gap. Your price has not returned back to fill it, but in future price will still come back to fill it. Okay. There's also another fair value gap here. See another one here. See another one here. Are you seeing it? Our idea is to show you all these fair value gap, how to identify it. Okay. So this one price has already filled it. Look at it. When this one was created, price came back and fill it from this zone to this zone. There's a fair value gap. Immediately price come to the fair value gap, the price drop. I'm not teaching you how to trade it. I have done that in my previous video. You can look at it in my channel and go and watch those videos. Okay, where I have taught you how to trade it using fair value gaps. Okay, there's another one here. Okay, there's another one here. Okay, let's check this side when the price was moving up. Let's check. You can see here currently there's another one here, and price came down there. That's what is happening now. You see this one that was created. Immediately price returned back to this zone. It started moving up. You can see it currently from this zone. This fair value gap was created. Price has moved in this direction over 383 pips from this fair value gap. So fair value gap are important in your chart if you can able to identify it. It will help you to take your trading decisions. It will help you also in your risk management, because if you know how to identify it, you projecting your trades towards that zone, believing that whenever price comes to that zone, it will react. So basically, this is how you can identify fair value gaps in your charts. Let me see you in the comment section. If you have any question, drop it there. Or if you have any video you want me to do for you, drop it here. I will kindly come and do it. If you have not subscribed to our channel, kindly subscribe to our channel, like this video and share it. We have a free Telegram channel where I drop one or two signal weekly. Kindly see the link in the comment section and join the free Telegram channel. See you guys in my next video. Cheers.